house is simply just not a great investment. But if you're going to buy one, put some Bitcoin with it, Unless you're going to be in the rental, in the business of housing, it's not an investment. It's a place to live. I voted Democrat the first half of my life, and I was under the spell that my parents were. It was a completely different Democratic Party. Okay, it was for the people. And then somewhere along the line, it wasn't just get even, it was take something from somebody else. As I got in business and started realizing, oh, wait a minute, man, every time the state gets involved, it gets worse. The young generation has been priced out and that it's impossible, when in fact, in my belief, the young generation has more opportunity today than ever in the history of the world. This has never been an easier game to win at than right now. There's nothing I can say that gets people more riled up than this one thing. House is not an investment.
Today's guest is Grant Cardone, one of the largest real estate investors in the country and someone who's been rethinking how wealth is built as the rules around property, taxes, and capital continue to change. This episode is about Bitcoin and real estate and how they actually fit together. We talk about why real estate works for cash flow, why Bitcoin works for growth, and what happens when you combine the two in a world where regulation and inflation are reshaping incentives. We also zoom out to the bigger picture, why some people compound wealth across cycles, and while others never seem to get ahead, regardless of the environment. Make sure you stay until the very end. Grant lays out a simple framework for building and keeping wealth that cuts through almost everything you've been taught. Let's get into it. The first thing I want to talk to you about, Grant, thank you so much for coming on the show again, is what's happening with your Malibu property. So obviously you bought this $40 million property on Carbon Beach in Malibu. I think it's the last standing property after the Palisades fire in early 2025. Lots of damage with it. You tweeted out 2 days ago that 1 year later, you still can't get in and do any repairs. So what's the holdup here, and why is California so against you going in and repairing your own property?
Well, they're clearly against anybody repairing anything. I mean, if you just look at what's been done, there was 54,000 structures destroyed on 18,000 individual lots, and mine was one of them. Mine wasn't destroyed, taken to the ground. Mm-hmm. But Joe, the crazy thing is, 18 homes to my right are completely to the ground, nothing there. Mm-hmm. Nothing's been done on those 18. To the left of me is probably 58 homes, completely to the ground, gone. Nothing's been done there. No permits, no approvals. That's just on one beach. This is Millionaire Beach and Billionaire Beach. Mm-hmm. I think it's called La Costa and Carbon Beach. The homes that didn't get destroyed, by the way, were concrete block that had been renewed over the last 10 or 15 years through a long process with the Coastal Commission. Because they'll let you approve something there, but it takes sometimes 6 years to get it approved, and people that want to live in those spots don't want to wait. Imagine being 58 years old and you're like, I'm going to have my house done when I'm 64. My kids are 13; they'll be 19 when it gets done. That's not the goal, right? Yeah. So those people just decided, well, particularly people with money, they said, I'll just go to some other place like Miami or Arizona where I can have the house I want. Long story short, these homes to the right of me were burnt to the ground. Mine was affected by smoke damage and some physical fire damage that I want to fix. Now, it's been almost 12 months today. There it is. It's been 12 months today. You could see that's the west side of the house right there. And those bedrooms were damaged in the kitchen. Mm-hmm. The city came to me. We're asking for permits just to approve it. Imagine that. I have to go get a permit to put my house back in the condition it's in. There's 18 permit processes. It's been 12 months. I still don't have approval. And this is just smoke damage and fire damage. Mm-hmm. They gave me a warning that if I spend more, this is a FEMA rule. I didn't know this existed, but if I spend more than 50% of the last building's assessment, not the land value, but the building's value. Mm-hmm. If I spend $1 more than 50%, then I need to take all those concrete structures that you see at the bottom there.
Yeah.
I need to take them out of the ground. They're 36 feet deep in bedrock. They're 36 inches round. It's all concrete underneath the bottom of this house. And they would require me, if I spend $1 more than 50% of last year's assessed value of the building, I would have to take all of that out of the ground and start over and spend somewhere between $45 and $60 million.
That's completely insane. It doesn't make an ounce of sense. And your property held up remarkably well here. It seems like, I mean, relative to the rest of the home, I don't know how extensive the damage is elsewhere in the property, but it seems like the damage is pretty localized. And even that, if they're not allowing you to rebuild this small area of the home that seems like it was damaged, like I can't imagine anybody else on this strip is looking to stay there. That's going to drive a lot of tax revenue out of California. That's going to make it so that nobody wants to buy these lots. I think we're going to go half a decade to a decade, and more than half of the properties here are just not going to be rebuilt because California is just dragging their feet on this.
Well, so what does that do to my value?
Exactly.
Is it good or bad?
It's fantastic for your value. You are the only person on the entire beach that has a home that's built.
You know, a guy said, man, you've been blessed, man. You're just blessed. I'm like, well, what about the other people, bro? They weren't blessed.
Yeah.
Like, look, it's not that I was blessed. I had a building built of concrete block. Fire cannot destroy concrete. And the next home, when I went west to the right, the next home to me, guess what? It was also built of concrete block. The point is, if the Coastal Commission would get out of the way, they control 1,100 miles of coastline. It's 12 people that control that coastline. If they would get out of the way and let people build what should be built there, which is, you know, new construction, new buildings, and get out of the way of controlling the coastline or some look, their control or lack of control actually created the largest environmental problem in the state of California. And a ridiculous waste of money, by the way. If all that was built to concrete block, it was modern, it wouldn't have happened.
Yeah, no, absolutely. It seems so. And it seems like this is not the latest, but one of the things in a long line of things that California is doing wrong when it comes to governance. Another thing that you've been pretty vocal about in recent days is a proposed billionaires tax in California. Where effectively it's going to be an unrealized capital gains tax, taxing your assets, targeting high net worth individuals, and it would stack on top of existing federal capital gains taxes. As per usual, the politicians are saying that, oh, this is all about being fair. But really, it's just another measure, in addition to the difficulty rebuilding down in Malibu and all the other homes that were damaged, of driving tax revenue out of the state. So obviously, you're very familiar with this. You've probably done a lot of work to see how this impacts you. What exactly is the tax that's being proposed, and how does it work in practice?
Well, don't confuse it with this billionaires tax. That's the headline to create division. It's not a billionaire tax. It's a tax. It's a capital gains tax. It's basically suggesting that anything that you own, cars, art, houses, rental properties, stock market assets, Bitcoin, gold, silver, property, all property will be taxed at a capital gains rate. Imagine, look, this is intentionally trying to drive people out of California. They want people gone from the state. They want to reduce the population there, particularly of able and powerful people. And you're like, well, why would they want to do that? Well, this is not, you know, people often refer to the California as incompetence, but it's not incompetence, because you cannot have mass, consistent, repetitive, disciplined, incompetence at this level. There's just not that many stupid people.
Right.
This has to be intentional. When you get the same result over and over, okay? Elon leaves, all the way down the food chain to guys like me. I left there 14 years ago because they took the taxes from 10% to 13%. That was a 33% increase. 10% to 13.3. It was a 33% increase. Most of my business was outside the state of California, and they were collecting dollars on income coming from South Carolina. I owned real estate in South Carolina. They wanted to tax that. I'm like, guys, you don't own that property. You had nothing to do with it. I just live here. So we left 14 years ago before it was popular. Since then, Chevron's left, Mark Wahlberg, Tony Robbins left, Phil Mickelson left. I mean, all these super high producers now, including a lot of companies. Now it's moving all the way up the food chain with even more liberal people leaving. Peter Thiel is leaving now. Like it's going to continue on. They're forcing people out of the state.
I saw Peter Thiel just set up an office in your home in
my backyard. Yeah, exactly.
Yeah, that's right.
So this will continue. Why? Why do they want people out? They want people out because now they can control the greatest landmass on planet Earth. Arguably, California is the finest piece of real estate on the planet. Without a doubt, no argument, the best piece of real estate in the United States of America. 40 million people live there, $4 trillion economy or thereabouts, third or fourth largest economy on planet Earth. They want to control that coastline. And I think what they want to do is bankrupt the state and depend on federal funding.
It certainly seems that way. Like, if they're not just stupid and they are actually evil, and every single measure that they take is in an effort to drive the people who are actually funding the state out of the jurisdiction, then it seems to me that they're trying to.
Real quick, imagine if you let's say you're a startup and you have a great idea for a new company, which California's produced some great, unbelievable companies.
Which we've got a startup located in California.
There you go. Let's say you're probably paying yourself a couple $100,000 a year, $150,000 a year. You're a startup. You're not paying yourself millions of dollars. And let's say the company, you hit it out of the park and the company is now worth $1 billion. California will now want to tax you on the $1 billion. I don't know what the rate is. Do you know what they're saying?
I don't know, but it's close to 50% probably. Something.
Well, let's say it's even 5%.
Oh.
That means they want 5% of $1 billion, which is $50 million, and you only pay yourself $140 a year, which means they own you and they own your company. This is communism, man. This is the state owning your property. And so what it'll do, people will continue to move from there. And it's unfortunate because it's such a great piece of land, man. It's just so unbelievable. Until I lived in San Diego. I lived in La Jolla. La Jolla's, one of the most beautiful places in the country. I left there, moved to LA for opportunity and to meet my wife. Left LA to move to just get out of there to continue to build my business because they wanted, we had a small company making $2 or $3 million, but we were paying, almost 15% of that to the state, and they weren't providing me with any benefits. And every time I got involved in any kind of litigation with my real estate, dude, we lost every time. Awful. People wouldn't pay their rent. We couldn't get them out of the property.
Yeah, that's another thing. I know you've spoken to Graham Stephan before in his show, and he just mentioned that he sold his last property in Los Angeles specifically for this, because if he kept it, he would pay an insane amount of taxes. And if he rented it out and he tried to sell the property at some point down the line, he would need to pay the tenant in order to relocate. They would be able to stay in the property for 2, 3, maybe 4 years without paying any rent. He would have to go through all this paperwork. He did the math and it just didn't make sense. And it's a really, really sad thing to see. It's the most gorgeous area of the country. I've long said this. I'm from California. I now live in New England, which isn't much better, frankly. It's kind of disparate. You have New Hampshire, which is great. Then you have Massachusetts and Rhode Island, which are not so great. But it's really unfortunate that the most beautiful areas of the country are run by these socialists who seem dead set on just driving the capital out and making people as miserable as possible, reliant on the state so they can control you. And this is something that you've talked about on Twitter ad nauseum. We see Zoran Mamdani getting elected in New York. I know you have a lot of things to talk about there. What is it with this rise in socialism? It seems like at the same time, there are a lot of young people like myself and people like yourself who are openly talking about how great capitalism is, how it's the greatest system in the world because it turns what would otherwise be a zero-sum game where in order for some person to win, another person has to lose, into a positive-sum game where everybody wins, into socialism, right? There's this decline into socialism. What do you think's driving that?
I think what's driving is that it's easy when life is tough. It's easy for you to raise your hand and say you're a victim. And I know I spent 10 years of my life in a really terrible situation. And, I was looking for anybody to blame but myself. My life didn't get better until I took responsibility for it. But if you just look at the numbers, I voted Democrat the first half of my life. And I was under the spell that my parents were that this was not middle class, right? It was a different middle class. I'm sorry.
Back when the middle class existed.
Yeah. And it was the 1950s Democrat Party. It was completely different. Hardworking, unions, bust your ass. Dad goes to work, mom stays home. It was a completely different Democratic Party. Okay. It was for the people. And then somewhere along the line, it became handouts, it wasn't just get even, it was take something from somebody else. And as I got in business and started realizing, oh, wait a minute, man, every time the state gets involved, it gets worse. When I go out and just, pull myself up by the bootstraps, things get better. Fast forward to today, if you look at the socialist cities, take New York, Boston, Chicago, LA, San Francisco, those are 5. Those are the most expensive rental markets in America. They're the most expensive rental markets, most expensive housing markets, highest regulation, highest taxes, highest sales taxes. Like, They fail at everything. Everything that's for the middle guy, for the come up, it's harder in Boston to buy a house, harder in Chicago. Taxes in Chicago, you can't even predict what they're going to be. New York City, you don't know anything there. The average rent in New York City is $5,700. Average rent in Miami, and this is for something that was built in 1940. Average rent in Miami is about $2,200. It's $3,000 less, and it's new product. Average rent in Silicon Valley is about $9,000 for a one-bedroom, 1970 built home. If you want a apartment, if you want to be anywhere within 3 or 4 blocks of Facebook. So where they regulate and promise fairness, it actually becomes more unfair. And that's just what the numbers are. It's not red or, people should just look at the financials of it. Where the government gets in the way, things get more expensive because they won't allow building. Like that whole Malibu coast should have been rebuilt 30 years ago. People wanted to rebuild it. All those homes would be there.
Yeah,
you don't see that happening. You don't see that happening in Miami, right? With new buildings. You want to see new buildings in cities. Same thing in New York. Look what's happening in New York. All the old buildings are being left behind, and J.P. Morgan spends $3 billion on a new build out.
Yeah, it really is remarkable to see. At the same time, in New York City, they have rent control. A lot of the apartments there are rent controlled. And so as a result, the landlord can't put any money into improvements because he can't raise his rent. And then he's allowed to raise his rent by what, 2-3% a year when inflation's 7 to 15% a year if we're talking about the dollar getting debased. So these buildings only get worse. And then as a result, the people vote in more politicians who are going to control rent even further, who are going to crack down on landlords even further. The conditions of the property get worse. People flee. They become more reliant on the government. It's just this vicious cycle where people become increasingly reliant on the government. The capital owners can't do anything about it, and so they just decide to leave. And then all that's left on Wall Street are the banks, and then a bunch of people, and then a bunch of landlords who are selling their properties en masse because they just can't take it anymore.
And then there's the voices online and even in the Bitcoin community, which is sad to me, that would suggest that people, the young generation has been priced out and that it's impossible, when in fact, in my belief, the young generation has more opportunity today than ever in the history of the world. Like this has never been an easier game to win at than right now. And that's what I would hope. I mean, I was hoping Trump would actually disseminate an education program for wealth and prosperity in the country to actually get Americans financially literate and unindoctrinated from this idea that saving money's good or buying a house is a good thing. And I know you like the housing sector because you live off of it, but people want to buy a house. And no matter what I tell people about a house is simply just not a great investment. But if you're going to buy one, put some Bitcoin with it, But if you're going to buy one, just understand it's a house. It's not an investment. It's not, It's like a car. Unless you own a car dealership, a car is a car. And a house is a house. Unless you're going to be in the business of housing, it's not an investment. It's a place to live. And I was hoping that Trump would, and I'd written him and said, hey, I'd love to help you with a prosperity program to educate Americans that the 21st century investing is different than it was in 1960. Where we were saving money, buying homes. We were in an industrial revolution, dude. We were building a middle class that didn't exist, right? So how you do money in 1960 and 1970 is different than how you would have done it when the internet came around in 2000. And so that's what I was hoping he would, and maybe he'll still do it. I know he's going to build a bunch of homes. I think in the first quarter, he's going to come out and say they're going to build somewhere between 3 and 5 million homes.
Amazing. Yeah, no, that would certainly help to fix a lot of the affordability issues that we have. I know you posted a chart the other day that showed the cost of owning a home versus the cost of renting. It has never been cheaper to rent relative to owning a home. Why is that? And also, I asked your brother this. I had him on the show a couple of months ago. Great dude. Gary and I go back and forth on X Spaces all the time. Why is a home not an investment? I mean, I know this answer, but for folks in our audience, this is one of my favorite topics to touch on. Why a home isn't the investment that you think it is. So just give me your spiel there. What's the TLDR?
Well, I don't there's nothing I can say that gets people more riled up than this one thing. A house is not an investment. And even if it was, it'd be a terrible investment. Now, I own homes. I own one right there in Malibu. You just showed it, right? Is that a good investment? I paid $40 million for it. I'm still paying property taxes. I can't live in it. The state will not allow me to go live in that house right now.
How much are you paying on property taxes for it on a yearly basis, by the way?
That it's probably 200 grand.
Goodness gracious.
It's 5%.
And you're not even allowed to
I'm
live
sure
in it.
it's half of 1%.
Yeah.
No, we were renting it. I was renting it for $250 a month. So it could have been decent. I mean, it was never an investment. It was a place for us to go and retreat. And if we broke even every year, it was cool. But why is a house not a good investment? Okay, so, and I've made millions of dollars buying homes. So just to be perfectly clear, I have bought single family homes in unbelievable locations. These were freak homes, though. These were trophy homes. These were irreplaceable. I bought a house in La Jolla on the beach. I paid $3 million. I sold it for $9 million. I bought a place in L.A. It was next to Leo DiCaprio's house in front of Dr. Dre, or right behind Dr. Dre's house. The location was stupid. I bought that house for $6 million, sold it for $15 million. Like I've made money on homes before, but that doesn't mean they were good investments. Because this is why. First of all, if you're going to finance it, it's going to cost you today, it's going to cost you 6.58%.
Wow.
So in 30 years, if I round it off to 7%, I have to make 210% on the house over 30 years to pay interest. In the state of Florida, you probably have a tax somewhere between 1% and 2% a year. Now I need to make another 60%. Maintenance is 1% a year. That's another 30%. If you have HOA fees, which most of the new housing today has some kind of HOA community fee, now you got another probably 0.5% to 1%. I have to make 300% before I furnish my house, paint it, before I replace the roof, the gutters, take care of any problems. I haven't even paid house insurance, and nobody can tell me what house insurance is. That could be $500 a month. It could be $5,000 a month. I have to make 300% on my money. That means if I bought a house for $1 million, I'd have to sell the house for what? Like some crazy, ridiculous number in the future. Yeah. Now, in addition to that, I could have been invested in NVIDIA with my down payment. I could have bought Apple stock. I could have bought the S&P 500. I could have bought Bitcoin. In Miami today, where I'm at today, I can rent a $40 million house for $15,000 a month. I can rent one of my guys that works for me pays $10,000 a month for a place that's probably worth $18 million. I mean, the owner's losing money with the HOA fees, taxes, his cost of money, et cetera. He's losing money. That's why I say a home is not an investment. If you go back 100 years, the average home, when adjusted for inflation, when they bought it, my dad bought a house for $7,800, sold it for $400,000. The average return's about 1% a year.
Completely insane.
I mean, that's a good investment.
If you look at the national average now, the Case-Shiller home price index year over year, less than 2%, right? And that's aggregating everything. That's not talking about locations where home prices have been flat for 5, 6, 7 years. You look at other investments like Bitcoin. Over the last 10 years, Bitcoin's done 70% a year on average. Over the last 5 years, it's done 28% per year on average.
Yeah, with no gutters to fix.
That's exactly right. And now,
no property taxes to pay.
Yeah. And so I suppose for young people particularly who are so fixated, and myself included, for a very long time until I started hearing kind of what you were saying here, and this became my mental model. For young people who are looking at the price of homes and feeling destitute, they're feeling priced out, what advice would you give them in order to build wealth instead of focusing on a home? What should they focus on?
Get your priorities right, okay? Understand that your parents didn't know everything. Your parents were born at a different time. Like, things change over time. You wouldn't go back and use a landline today, right? You wouldn't you wouldn't look for a coin machine to make a telephone call with. Like, you wouldn't get a typewriter, you use a computer. We're going backwards, not forward. You got to move forward with money. And so the priority should be this: get good at something, earn money. Do not spend the money on you. Invest it in a business first. Once you have passive income coming in, then do whatever you want with the passive income. I don't spend earned income ever. I've made this a policy for 40 years now, since I was 30 years old. 37 years. Money comes in. Okay. I wouldn't go to college, by the way. That was stupid. That was a mistake. I went to college, got a job, bought a house. I did things in the wrong order. My priorities were not correct. I was basically doing what I was taught by my family to do. And it's like the way my mom made spaghetti is the way I made spaghetti. Okay. The way she cooked a turkey is the way I cooked a turkey. The way she did money is the way I did money. And I never looked at it. I never observed what's Warren doing with money. Okay. What's Elon doing with money? What does Steve Jobs do with his money? How many homes did Steve Jobs own? Homes. One. He owned one home his whole life. Warren Buffett, one home his whole life. Elon doesn't own a home. He built a compound for his kids because he's got 29 kids or whatever, but he didn't buy a home first. What did he do? He put all his money into a business and created wealth for himself. And then when he had enough income coming in, he went and bought a house. But it was a third or fourth thing down the line, Joe. It wasn't a first thing. And so that's what I would tell people. The little strategy I use is earned income. My little calculation is my little science experiment. Earned income is never spent. All of it's invested, above basic living, rent, a car, a t-shirt, basic living, whatever's acceptable. I will not spend earned income, taxable income on any improvement in my condition and living life. I invest all the money from earned income, and then I take any passive income to improve the quality of my life with cars and watches and fun stuff.
Very well said. So I suppose it can be a framework of thinking about things, not in terms of wants and needs or whatever, but thinking about what you buy in terms of depreciating assets and appreciating assets. Like, you mentioned a t-shirt. This t-shirt, for example, I got a pack of 10 of these from Target for $20. These will do me good for the next 5-10 years, as long as I, don't put on 20 pounds of muscle or something like that. That's all I'm going to need, right? I've used the exact same wallet for the last decade, right? Since I was in high school.
If you put your brand on that t-shirt, you could write it off.
That's right. Exactly. And turn things into business expenses.
That's why I'm rocking my jacket right now. It's $80, but really it only cost me $52 because I get a $38 write-off on the shirt because it's got my brand on it.
Very well
said. It's my uniform.
Yeah. Yeah. That's how you do it. Yeah. I saw a tweet of yours, I think before New Year's Eve. It was a 10X jersey. And you said brand new uniforms just came in. Yeah. Very intelligent.
Look, this is the other thing. If I can't write it off, I'm not going to buy it. I've been doing that since I was. So what am I trying to write off? What can I got to write off? I mean, if people wanted to create wealth, they would just literally make a list. Everything that I can write off, I'll buy, and everything I can't write off, I won't buy. You can't write off a house. You buy 4 units, you can write off all the interest without limitation. I have $2 billion worth of debt on our real estate portfolio. I can write off every penny without exception. There's no limit. I could have $200 billion of debt. All the interest is tax deductible. But when you buy a house, you can only write off interest on the first $750,000, which is about $42,000 worth of interest expense that you can write off. Property taxes written off without limitation. Gutters, roofs, refrigerators, ovens, microwaves, you name it, dude, floors, improvements, all of it can be written off without exception. You cannot do that with a house. You can write it off over 27 years. But like this real estate deal we did in December this year, we bought a $250 million project, added $100 million of Bitcoin. It was a $350 million purchase. We wrote off $80 million of Bitcoin, $80 million in write-offs on a $350 million purchase, which included $100 million worth of Bitcoin. So we're literally figuring out ways to get write-offs and have our real estate buy our Bitcoin.
Fantastic. That's Bitcoin and real estate alchemy. I suppose it's a good transition into chatting about Bitcoin a little bit. I want to ask you about a quote that you have on the website where you talk about the Boca Raton deal that's still live. You ran a thought experiment. It was, what if every rent check from the last 12 years had been converted into Bitcoin? And the answer is that you would have roughly $160 million of distributions, turning into nearly $3 billion. So what does that tell you about the opportunity cost between real estate and Bitcoin?
Well, what was happening was I've been buying real estate for 30 years, and I had a bunch of it. I had 6,000 units that I owned 100% of. We own about 14,000 units today. The other 8,000, we raised money from my audience, so I have partnerships in those. But the first 6,000 I owned, me and my family owned 91% of. So the cash distributions over 12 years is the rents go up over time. The rents started out at like $600. 12 years later, the rents are not 600. They're 1,800. I didn't do anything, by the way. Like, I just made a decision. This is the beautiful thing about wealth investing, right? And why California, you want to keep California out of your shit, because over time the rents just went up as we printed more money. As inflation hits the dollar, the rents go up, the values of everything go up, and when the rents go up, I end up with more cash flow. So one day I looked up and I'm like, damn, it was crazy, dude. I never thought this was going to happen to me as a kid. I remember when I said, oh, maybe one day I'll be a millionaire. I hope so, right? I was earning $1.6 million a month in free cash flow from those 6,000 units. And my brother said, you should put that in a calculator. You don't need the money, Grant. I have 5 businesses that pay me money every month. He says, you don't need the money. You should put it in a calculator what that money would convert to had you put it into Bitcoin back in 2013 when I bought these assets. Well, it was like, I don't know, the whole $1.6 million was like $42 billion or something. And I'm glad I didn't have a gun next to me, because I think I'd have killed myself right then and there. But the point is, I didn't need the cash anyway. I didn't use the cash. I still have the money. The money's sitting. The money got reinvested in real estate projects. But I could have taken that free cash flow. I'm not a spender. I'm not a degenerate. I'm extremely disciplined in how I spend my money. I mean, I have, not reasonably nice cars, but nothing exotic. Never bought supercars. Have a handful of watches. I regret them all.
I've heard that. Yeah, I think you said you had 4 cars or 5 cars or something like that, despite the immense amount of cash flow you're getting in each month.
Dude, I have 2 Teslas. I have 2 Teslas that are, I think those are both leases under the company. I have a Discover, one of those little Range Rovers for my daughter that I won in a backgammon tournament. And I have I bought my wife a Bentley SUV, very nice car, for Christmas. It's under the company, by the way. It was a tax write-off. I only bought it because it was 6,000 pounds. Again, it was a tax write-off. And so it's a company vehicle. And I own a G-Wagon. Okay, like it's not, it's not. I've had some of the other stuff. I got rid of all of it. It's dumb, dude. It all gets dumb at some point. What I want to do is I would love to create immense amounts of wealth. I'm actually motivated by that. I like the idea, and I don't back off from it, and people don't like me saying this, but I would like to create immense tens of billions of dollars of wealth for my family. Why do I want to do that? I don't know. Why did I want to be a best-selling author? Why do I want to do big arenas with 34,000 people in them? Why does anybody want to be successful? Why did Tom Brady want 6 Super Bowl rings? I don't know, because I can. Maybe I can. The game. So when my brother showed me that, I'm like, dude, what am I doing? Like, when people say, why does somebody want to get rich? Why does somebody want to stay poor? Why would somebody not want to do the best thing with your time, your energy, your resources, and money? And for me, when somebody gives me $100, I think I have a fiduciary responsibility to make sure that $100 turns into something more than what they gave me. I'm put in charge of that money. And my dad died when I was 10 years old. He busted his ass to take care of this family and the name. The problem is, when he died, the income stopped. And when the income stopped, the family went into fear. And so I don't want that to happen for me. I'm trying to break this cycle of get it, lose it. I'm trying to get it, maintain it, and so my family can continue to extend itself. And I think Bitcoin does that. I think real estate does that. I think gold and silver do that. But gold and silver, to me, are things that I have to figure out where to store. They don't produce income. They don't give me any tax write-offs. And I think that they're very old forms of money that people will lose interest in. I've never been interested in either one of them. Right. The moment they say it's a precious metal, I'm like, why did you have to add precious to it? Because it doesn't seem precious to me. It seems dirty to me. 67 years, I've never had somebody offer me a piece of silver or gold for anything. Not one time. I've had people offer me Bitcoin.
Yeah, you had an event that you spoke at, what was it, 10 years ago, 13 years ago, where someone offered you, was it 500 Bitcoin for your appearance, or 50 Bitcoin?
It was 115.
115.
Yeah, I still have them today.
Tremendous. Very well said. And back then, when Bitcoin wasn't necessarily as big and important as it is today, what drove you to take that deal? Was it the guy just being a good salesman? Was it something that just piqued your interest? Did you just
No, the
not
guy,
need the money and you were willing to?
yeah, no, the guy asked me to do some work. You know, he offered me work. I think that that's a very important thing for young people to understand. Don't say no to work. The money doesn't matter. The work matters. He didn't have cash, and he had this thing called Bitcoin. I didn't know the difference between Bitcoin and STDs. BTC. I said, is it STD or is it a BTC? I didn't know what it was. I had no clue. But that's not his fault. He could have said Dogecoins. He could have said Ethereum. He could have said Solana. He could have said XRP. He could have said pigs, mules. He offered me work. I was in Vegas. I said, I don't know what Bitcoin is, dude. And he's like, oh, well, you'll put it in a while. He's like, Grant, I can't pay you in cash. I said, how many people are going to be there? He's like, 500 of my people. I said, good. What do you want me to help with? The work. It was the work first. And he says, well, I want you to help these guys be motivated and start out the year right and become better salesmen and, you know, be proud of the company. I said, great. I'd love to do the event. Now let's figure out what the Bitcoin is. What do I do with it? How do I keep it? If I want to convert it to cash, how do I do that? What's that going to cost me? Blah, blah, blah. And then I never converted it. I said, okay, shit, I'll just take it. And it's worth, I don't know, $11 million.
Wow.
It was a good speaking gig.
Yeah.
I don't remember the speaking. I don't know. I don't remember what I said. I don't think the company even exists anymore. I think the company failed. And I'm sure those 500 salespeople are all over the world now. Most of them are, you know, probably remembered the event. And the money lasted. Now, if I'd have taken, let's say the, you know, back then I think I was charging 50 or 60 grand a speaking gig. If I'd have taken that money, the money would be gone. Over 13 years, that money, if it was $50,000, that money would be worth at least, what do you think, half?
Something like that. Yeah, probably a little bit less.
It earned nothing. It would have earned nothing in that period of time if I didn't invest it. So instead, the money went from, you know, 50,000 to it went up 20 times.
If you've been listening to this show for a while, you know the problem. A lot of Bitcoiners are asset rich, but liquidity poor. You've got a conviction, you've got Bitcoin, and in many cases, you've got a home with a lot of trapped equity that's just sitting there doing nothing. That's exactly what Horizon was built for. Horizon lets homeowners use a portion of their home equity to stack Bitcoin without loans, interest, or monthly payments. This is not a HELOC, it's not a reverse mortgage, and you never have to sell your home. You get the Bitcoin, you custody it yourself, and Horizon does not take any appreciation of your Bitcoin and only participates in future home appreciation. If you're a long-term Bitcoiner who wants more exposure without selling assets or taking on debt, this is worth considering. You can see your home's Bitcoin potential today at joinhorizon.com/calculator, or if you want to talk it through, you can schedule a one-on-one at joinhorizon.com. Stack Bitcoin using your home equity with Horizon. Now, back to the show. Incredible. It offers a tremendous degree of asymmetric upside, right? And I think that there are two schools of thought for young people. One is, you know, work is futile. I don't want to work because I'm going to be earning dollars, which are depreciating. Home prices are going up so quickly. I don't think I'm ever going to get ahead. But then there's another school of thought for young people, which is I'm going to work as hard as I can. And then instead of sitting idly on my dollars and hoping that they grow faster than the rate that homes are rising in price, that car that I want is rising in price, they're saying, all right, I'm going to save the fruits of my labor in Bitcoin. But there's another group of young people who are saying, okay, I don't want to work. I'm not motivated to work because of how expensive everything is. I'm going to go fire up DraftKings and I'm going to do a 6-leg parlay, or I'm going to open up Poly Market and I'm going to bet on real world events. There's this great degree of financial nihilism where, because young people think they can't get ahead, which goes against what you and I believe, which is that this is the most prosperous time, the most opportunity, they decide to throw their money and essentially buy different versions of lottery tickets, right? And throughout history, if there's one thing that we've seen, lottery tickets are just another way for people to pay additional tax, like this voluntary tax that gets
That's
paid.
right.
And so for young people who are trying to get ahead, and I know you've got kids, what are some of the biggest money lessons that you teach in order to allow young people to start building this wealth, gain that asymmetric upside? And just, I know that you were in a position in your 20s, you had mentioned at the front of the show, where you went through a great deal of struggle. You made a lot of changes in your life. For young people specifically, what are the biggest misconceptions and tips you'd give them about wealth building, about money, and about staying motivated?
Well, the first thing that you reference is like this is the best time, not the worst time. So if you're around people that are telling you can't get ahead, you can't buy a house, everything's been priced out, it's too late. First thing you got to do is get away from those people. Success is a mental game. It's 80% mental, man. I'm telling you, like, and I've met a lot of people that are extremely successful. I was with a guy at my church this weekend. He's worth 12 or 13 billion dollars. He's like, bro, it's a mental game. The whole thing's a mental game. Okay. And the mental game is you got to change your mind about money. Like, well, I was brought up where money was scarce. Don't waste your money. Don't play with money. Money doesn't grow on trees. None of that's true, bro. Money is not scarce. There's more money on this planet today than any other time in history.
If you have a scarcity mindset, you're limiting yourself before you even get off the starting line.
You're done. You're already done. Okay. There is immense amounts of money. Okay. So number one, so you have to change the scarcity concept as you refer to it. Number two, all money is other people's money. Your goal is to get other people's money. Okay. Like, who's got my money? Not, I need to make money. You don't make money. Okay. That's left to governments. Governments make money. America prints it at will. It doesn't even print anymore. It just moves a digit over and said, we have another zero on our books. So all money is other people's money, which means the via to the money is people, not ideas. It is not, I need to build something or I need to create something or I need to come up with a good idea. No, you need to connect with people to get fiat. Okay. So that means I need to become a communicator. I don't need to build something. I need to find somebody that can give me, loan me, invest in me money. And I wish I'd have known this when I was 25 years old, dude. I'd be worth $20 billion today or 30 or 40 billion. This is what the banks know that people don't know. All money is other people's money. And what you want to do is you want to control that money. Now, once I get that money, what am I going to do with it? My job is to get it, keep it, and I can't keep it if I save it. So this is where people have to start becoming unindoctrinated. We've been brainwashed to save money at the bank. The bank doesn't even keep the money. So this is where the education or the re-education or the unbrainwashing comes in. Me saving money at Wells Fargo, having a 90-day account that Dave Ramsey and so many of the financial professional, the personal financial planners, you need a 60-40 balance. You need 90-day account. You need all your payroll put away. I don't need any money. I don't have any money in my pockets today. I'm gonna be fine. I can go hustle somebody out of a Starbucks. I can get somebody to pay for my lunch. I don't need money. I need people. And I would tell the young people out there, you guys got to learn how to communicate. You have to become the best communicator you can possibly be. You do not need a higher IQ. You do not need to know anything about AI. You need to know how to communicate. Live communication with another human being and build value in that communication where you have confidence so that when people look at you, they're like, man, you're different than most of these young kids. That's the other big advantage now. Most everybody's tapped out because they're telling you to tap out. They're literally trying to brainwash the public into being medicated, vaccinated, and to sit on the sidelines by telling you you're priced out. But how do you explain that 80% of all the new millionaires this year are first generation? And that's a fact. Okay. The billionaires that are being made today, they're coming from nowhere. Like we're going to have the biggest explosion of millionaires and billionaires in the history of the world. I think we go from 3,000 billionaires to somewhere between 20 and 30,000 billionaires in the next 10 or 15 years. These whales are going to be walking around the planet. It's going to be a normal thing. You're going to have millionaires go from 32 millionaires to hundreds of millions of millionaires. Boats, planes. This is going to become a normal way of life where people are going to be having unbelievable lifestyles, not worse lifestyles, better lifestyles. But it's going to be for people that are in the game and believe in abundance and prosperity and possibility.
Very well said. Yeah, have an abundance mindset And ultimately, invest in yourself, have the confidence to invest in yourself, learn communication is the most valuable skill because it's translatable across any domain. If you can communicate well, if you can basically sell anything, because ultimately everything is sales, right? Everything is sales. When you wake up in the morning, you're selling yourself to go brush your teeth. When you go to the supermarket, when you communicate with anybody, you're selling them on something, whether you know it or not. And so arguably it's the best skill to have. And so if you have sales ability, if you have confidence in yourself, if you're a good communicator, you're already ahead of 99% of people. And then it's just about maintaining that momentum, carrying it forward, earning wealth using those skills and storing it in something that they can't print.
Yeah. And then two other things I would add to that is don't turn any work down. Accept all work. Accept all work. Don't even worry about how much. Accept the opportunity, because on the other end of that opportunity is a person. Regardless of what they're paying, don't look for what they're paying. Look for the opportunity. Okay. Like, what else can I do for those people? You know? And then two, like, how do you add value that you're an exception? Let's say I'm a laborer. I got to clean up this Malibu house.
Mm-hmm.
You know, they're going to get a bunch of Nicaraguans that are going to go in there and fix that house. They're going to clean it out. They're going to hire somebody. Probably, I don't know who my team's going to hire. They're going to hire some guys. They're going to come in at 10 o'clock in the morning. They're going to work till 4 o'clock in the afternoon. They're going to leave. But if Eduardo was smart, when everybody else packs up to leave at 4 o'clock, he would stay. He would stay and meet me. He would make contact. You have to close contact with the target. Remember, all money is other people's money. What you're trying to do is close the distance between you and the money. And if you have a bunch of excuses between you and that, I can't speak English, he's not going to like me, he won't trust me, I'm an introvert, I don't know what to say to him, I got to get home to the kids. These are all excuses, okay? And that's why there's so few people going after the game, dude. Mm-hmm. There are so few people going after the money game. It's unbelievable. Most people are going for basic needs rather than the entire bag.
And then if you go for the entire bag, the basic needs will fulfill themselves along the way.
Oh, you won't even worry about basic needs. You'd be like, dang, I skipped the bullshit and got to the good stuff. And that means people need to start studying the top of the food chain. Don't study what they say, study what they do. Like Warren Buffett says he would invest in index funds, but he never has. Over and over, dude. I would invest in index funds. Yeah, but you never have, bro.
Yeah, very well said. Dave Ramsey also, another one of his key points is do not take on debt, right? Yeah. Regardless of what you do. But he made his millions by taking on intelligent leverage, purchasing real estate, using that real estate in order to acquire more leverage, and on and on and on. And so ultimately, that's a really, really good lesson. Watch what they do, not what they say, because oftentimes there's a massive gap between those. Yeah,
and do a little more research. Like, okay, Dave Ramsey, great example. Now, I don't know if he's got debt on his houses or not. I think somebody said he owns 300 homes or something. And if he has no debt on 300 homes, okay, and they all have income, I mean, Dave doesn't understand mathematics, okay, because that would be the best debt you could possibly have on planet Earth. If he can borrow money at 4 or 5% on homes that are cash flowing at 7 or 8, he's basically earning 3% on money, other people's money, bank money. And the bank's going to lend the money to somebody. So let's say Dave doesn't have any debt on those homes. He's like, all debt is the devil and it's the demons and it's terrible and it's awful. Okay, but Dave, if the group that gave you that radio show before anybody knew you didn't have debt, we wouldn't know you. Kiyosaki talks about, the rich dad, poor dad. And then I saw recently that he sold Bitcoin to buy some little company, some little dump company. He sold $2 million worth of Bitcoin. I'm like, bro, why would you do that, bro? You sound like poor dad. Why wouldn't you borrow against your Bitcoin to buy this little dump company? By the way, if you're worth hundreds of $millions, I don't know why you're going backwards and buying a laundromat. Why don't you go take a real position in a company? All I'm saying to you, I'm not calling these two guys out. You need to study where people are at in their trajectory to wealth. Okay? Like if they're no longer in the hustle, they're going to tell you to conserve. I'm 67. My hustle today is stronger than it was when I was 27, 37, or 47. Dude, I want more. So my advice is going to be to expand and grow. If he's moving to the sideline, he's going to tell you to sell stuff, conserve, pay off debts, be more conservative. And I'm suggesting to the young people, man, this is the time you guys ought to be taking all your chances.
Very well said. Yeah, particularly for those under 30, no dependents just yet. I differ from that model a little bit. 24, recently married, expecting our first next July. So I have dependents, but the model that I've had over the last several years is take an outsized amount of risk while you can, because at some point you won't be able to stomach that amount of risk necessarily, because you'll have a bunch of dependents. So it matters more than ever to do that. I want to ask you about specifically Cardone Capital. Here's a chart that you've got on your website. 366 ultra luxury units, Boca Raton, Florida. This is your 10x Boca Raton and Bitcoin fund. Talk to me a little bit about this. You've said that real estate's for the cash flow, Bitcoin is for the growth. You've talked about wanting to disrupt the REIT industry. You've said that it hasn't changed in 65 years. You want to get to 5% of the $4 trillion REIT industry. Talk to me a little bit about what you're doing at Cardone Capital and how you're trying to shake things up.
Yeah. So, real estate's a heavy product. It's very, very difficult to move. Most real estate people have the same problems we all have the same problem. We're all judged by our cap rate, by our cash flow, by our location. Every 8 to 10 years, there's got to be big capital expenditures on the real estate. In this case of this picture, it'll need to be repainted. Windows will be fixed. The roof will be exchanged at some point. This is a great property, great location, but it doesn't matter how good the property is. It still needs to be fixed over time. You got property taxes, evictions, legal. Can't build another one like it. So it's very valuable in that case, right? We bought this piece of real estate. It was a $330 million purchase. We paid $230. We bought it out of bankruptcy. We stole the asset. You can't, if you were to build this today, you would spend at least $350 million to build it. We paid $230. Rather than stealing the real estate, all I did was add Bitcoin to the purchase price. I'm still below my replacement costs. So the blue line in this graph is the real estate. If it grows 3 to 5% a year, that piece of real estate in 5 to 7 years will be back to its replacement costs of $350, and we would make $120 million. But what I did at the purchase was I added Bitcoin, because what I'm trying to do is get a competitive advantage. I don't want to compete. I don't really want to be in a competitive market. If you want to grow and scale, if you want to 10x your business or 100x, you don't want to compete with other, in this case, real estate investments.
Yeah, so, Peter Thiel says competition's for losers. What you want is a
exactly. And it is. I wrote a book called If You're Not First, You're Last. I wrote that book, 12, 13 years ago. And it says the same thing. Competition's for losers. Competition's for spectators. You don't want to compete. You want to have a competitive advantage and dominate the marketplace. Well, there's $4.5 trillion of REITs in this country. Avalon, Camden, Starwood, et cetera. They cannot hold Bitcoin on their financial statement, in their treasury. They can't hold cash, Joe. They have to distribute 90% of all their funding must be distributed back to the investors. That law was written in 1965. It's not changed in 60 years, or 1960, hadn't changed in 65 years. So all our real estate projects now include Bitcoin with the purchase. This property was going to cash flow almost 5%. We added the Bitcoin. Now it only cash flows 3%. But I have the opportunity for both the real estate. Well, I have 3 opportunities here. Just the rent growth. Number 2, the condo development. The green line's the condos. We could condo develop this and pick up $100 million and sell it off. And when we sell it off, we would still own our $100 million in Bitcoin, about 900 pieces. And we wait for those 900 pieces to be worth more money one day in the future.
Excellent. Very well said. I think this is something, yeah.
What we'll do is we'll put these together and take this to the marketplace and go public with it and become a real estate Bitcoin hybrid rather than just a real estate company.
Love to hear it. Open this up to retail investors, institutional investors worldwide. That's an amazing thing. Do you have a timeline on that roughly? I think you're talking 2026 for that.
Yeah, we're in the lineup to pull that off this year.
Fantastic.
So like the investors in this particular project, it's closed. We're working on another one right now. And we've done 5 of these. We did 5 of these projects last year. Those projects should go into the public company. So those investors that get in in these individual deals. We'll bring that to the public market. We wanted to show proof of concept. We've already met with 8 banks. They're very, very excited about it. I think this recent 126 back to 80 flushed out some people that were thinking about copying us. So that's exciting for us because there'll be fewer players. So we think we'll be first to the market and change the way real estate investing takes place. It's my belief that nobody should buy a piece of real estate without having some Bitcoin on there, with the real estate, including your home. Like the PMI insurance on a house, I think it's a half of 1%. So on a $400,000 house, average price in America's, that's going to cost you about, what's a half of 1% of 400 grand? $2,000 a year or 20 grand a year? Yes, probably 20 grand a year.
Yeah, 20 grand a year.
So rather than buying PMI insurance, I believe that there'll be a day where you'll have a choice. Hey, do you want PMI? Just a piece of paper insurance that will support the mortgage. If you go bad on the mortgage, it basically insures the mortgage holder. Or would you rather that 20 grand, $1,800 a month, buy Bitcoin, Satoshis? And you would be forced to keep that as the insurance. It would be a Bitcoin insurance against you not paying for that mortgage. And so that in 10, 15, or 20 years, that $20,000 of Bitcoin that you bought every year, by the way, over 30 years, it'd be $600,000 worth of Bitcoin that you would have bought over 30 years, would protect the lender, provide you with a lower interest rate, and provide them with the insurance, and maybe you guys split the upside like what you're doing at your company.
Absolutely. Very well said. Yeah, Bitcoin, it's just got this transformative power, right? Whether you are, in the real estate game to the extent that you are, or whether you're a homeowner that only has one home, maybe a vacation property, integrating even 5-10% worth of Bitcoin on top of your home, on top of whatever property we're talking about, game changer, right? Much better option than insurance. If you live in a state that doesn't require insurance, it's something that I would advise on, right? Because rather than paying the bank, right, for the protection against your home, you're paying your future self. So should anything go awry, you have that pool to dip into rather than having to worry about paying this insane amount of money every single month for something you may never need, right? Then 20, 30 years down the line, if you don't actually need the insurance for anything, you've got this massive pile of Bitcoin, right? And you can do whatever you'd like with that. The last question I've got for you here, and you've been extremely gracious with your time, so thank you very much about that. You put out a tweet a couple of days ago. I want to ask you about it. It's about wealth, mindset, respect for capital. You said anyone can create wealth, but you have to change your mind about it. If you hate on it, you can't have it. If you ignore it, you won't keep it. If you don't respect it, it will go elsewhere. So what do you mean by that? And why does resentment toward money, resentment towards wealth repel it and cause people to not have it?
Well, look, whatever you hate on, you're pushing away from you, right? So you're not bringing it. You're not bringing it. You should embrace the things that are good for you. So most of the time, look, I was brought up in the middle class, and my mom didn't know it, but she actually taught me to repel success and money because she couldn't have it. She didn't know how to have it. She didn't have an income education. She didn't have a financial background. Like she was a spectator in the game. I was on a deposition yesterday, and the lady's like, I'm not an investor. I'm not an investor. She must have said it like 15 times. I don't know what I'm looking at because I'm not an investor. The things you say you're not going to be, you're not going to be. Like, I'm not an inventor. I'm not a husband. I can't be a father. All these things you're pushing away from you, right? And so I have become a bit of a self-dedicated beacon of, hey, you can be successful. Look, I did this from nothing. When I hear a private jet fly over me, ever since I remember the first time I heard it, I was 32 years old. I'm like, man, what is that? What is it? Who owns it, and how did they do that? If I've seen a big house that, like in a paper or in a magazine, I'm like, who owns that house, and what did they do to get it? And so I admire successful people, and I think most people innately admire success. We see it in our sports. People line up on Sundays to watch the big game and the big catch and the big breakthrough and the turnaround and it's like, oh my God, I'm being reminded of possibilities that I want to be successful, that I want to win the game. And whether the game is football, the UFC, a relationship, being a good father, like I'm sure you're going to be, Joe, or whether it's money, to me, it's just winning, dude. If you cook the best cookies that have ever been cooked, and they're your best recipe, and you're like, dude, you got to try these cookies, bro. These cookies are ridiculous, right?
Yeah.
You're excited and you want to share it with somebody because it's great. And I think that we just need to transpose that over to money. Money is not a sordid concept. There's nothing wrong with money. I think that the bigger problem is to have a shortage of money and opportunity. And that money is just, and that's why I say, man, look, if you don't pay attention to it, bro, it's going to go to somebody that pays attention to it. I'm confident that if you divided all the money up, this is what the socialists don't understand. You divide all the money up equally among everybody today, bro, I'm getting mine back. I guarantee you, it will not be even 67 months before I have all my money back. Because just because you can get it or they give it to you doesn't mean you can keep it. And it certainly doesn't mean you know how to multiply it. So get it, figure out how to keep it, which is very, very difficult to do. And the third thing is to figure out how to multiply it so that you can pass it on to the next generation or your church, your community, or whoever you want to help.
I would say over the next decade, you could let me know if you agree or disagree, but if someone were to become addicted to anything, it would be addiction to success. And that addiction to success will drive them more than anything. Keeping that mindset on a daily basis, never losing it.
Yeah, it's a good, healthy addiction. There's nothing wrong with it.
Tremendous. Very well said. Grant, you've been so gracious with your time. This has been an incredible conversation. We covered regulation, capital flight, Bitcoin, real estate, future of investing. The world keeps changing. Thank you so much for joining. People probably already know where to find you, but if they want to see more of your content and look at more of your work, where can they go to find you?
Dude, just Google the name Grant Cardone. I'll find you.
Tremendous. I appreciate it. Grant, thank you so much for coming on, man. I appreciate it.
Hey, thanks, Joe. Appreciate you, man. Hey, congratulations on your kid, too.
Thank you. I appreciate that.